What's going on? Why are we not seeing these technology companies flying as high as we've witnessed in previous IPOs over the last 12 months?
Well, I mean, I think it's just a matter of time. I look back to our portfolio company, Facebook, almost 10 years ago, they went public and it was not regarded as the most best performing or successful IPO. But 9, 10 years later, the stock price has performed quite considerably. So I think getting public is a successful event. It's a win. And I think that starts the conveyor belt of success for the ecosystem. When you have success, it creates more success. And I think it's exactly what the European VC and tech ecosystem needs.
So just to be very clear, we're not witnessing a watershed moment here where we see a rotation away from the fever in these technology stocks that have allowed many of them to go to quite high multiples on the back of very little evidence of earnings.
Correct. Well, again, so my business is I lend to early stage, privately held venture capital backed companies. We've invested $1.3 billion in Europe in the last 10 years, and we're seeing the backlog. We're seeing the companies do great things, raise big rounds of financing, have great success. And so I think it's just a matter of time before we see those liquidity events occur. And I think, fair point, I think we want to see exit events that are well priced, that perform well, because that success helps beget more success. So I think it's just a matter of time. And if the US markets are any indicator, it's on its way. It's just, let's be patient and let's continue to keep our heads down and execute and do good things, and exits will happen. I think last year, there was significant exit activity, 19 billion of exit activity in the European market. And so I think we're all expecting significantly higher exit activity this year as well.
Sajal, I was just taking a look at your portfolio and very wide range of bets and the sort of companies that you're invested in the US portfolio, from Facebook and YouTube to the likes of Beyond Meat, and here in Europe from Farfetch matches in the luxury space across to Revolut in the fin technology space. If I can just zero in for a moment on the Farfetch and matches model, these are two luxury commerce players, and we've seen a huge change of direction during the pandemic for luxury. Shops that used to be part of the mix for matches, for instance, have been shuttered for many months, and we've seen consumer spending at least take a little bit of a pullback at this point as savings have come into the mix. How have these two businesses performed, and do you think they've been steered off course a little bit by the pandemic?
Well, I think there's no doubt that in the early stage of the pandemic, I think everyone was sort of focusing on their health, their family, and not necessarily purchases. But then I think, as a result of the pandemic sheltering in place, we just saw this vast acceleration and adoption of the digital economy. I think some are saying 3 to 5 years worth of acceleration. And so we saw this wave pick up and we've seen the recovery. And I think it's changed the way people buy. And so I think we're seeing recovery in many e-commerce and consumer companies, even in luxury fashion. And so, again, I think we're seeing very positive indicators from these companies. And I think the question is, will we see that continue post sheltering in place and post pandemic if consumers will continue to shop online as well in person?